Hello everyone, and welcome to a Glassnode video update for week 5, 2024. So the market is still digesting what has been a really significant overhang of the GBTC product. Now, GBTC amassed about 660,000 BTC during the bull run in 2021. And now that it's converted to an ETF and come away from being a closed-end fund, there is an enormous amount of supply and new market dynamics that it's trying to be digested through. And it's important to note that many of the bankrupt estates, the Celsius and the FTX, many of these entities from that era, that 2021 to 22 era, were involved in the GBTC trade, often termed the Widowmaker trade for that cycle. So what I want to touch on today is some of the market dynamics around GBTC, but also more broadly, a bit of a view on what's going on within the Bitcoin space that tells us about this evolution towards a more institutional facing asset. So we're going to look at this from a couple of different angles. The first thing I'm going to start with is a couple of different price models, just looking at how Bitcoin is currently performing relative to previous cycles. And there are some very uncanny similarities. Bitcoin just seems to go through these particular patterns where it has very similar behavior cycle after cycle for whatever reason of gravity that is. We're going to look at things in terms of the realized cap, which is a really powerful tool to assess capital inflows and just the general dynamics of the market, a really good anchoring point for just understanding what's going on. We're going to have a look at exchange-related activity. This really is a great proxy for demand, and we have a lot of good tools here at Glassnode to really track this at a very granular level, but really understanding how those flows are changing, and in particular, how it's starting to look increasingly institutional in size. So we have had that correction down to about 38,000. We've rallied back at the time of writing about 43. So it's been a pretty volatile environment. We've seen a sell the news event. Now we've got a recovery bounce, and just trying to put a bit of context into what is really going on behind the scenes. So as always, please do give us a rate, a share, and a subscribe to help people get to this channel, and we will get started with the analysis. Okay, so as I said at the start, we're going to begin with just a bit of a view of where we are in the current cycle. Now, there's a lot of ways that we can plot these types of charts, and of course, the past is no indication of success or what's going on in the future, but we're just trying to get a bit of a map of where we are. And I find these particular charts here, we're looking at performance since the cycle all-time high across all the different cycles in the past, where our current one is in black. The reason I like to do this is less so about the actual price performance per se, more so understanding a bit of a length of duration, right? So markets tend to move with two big components. There is obviously where is the price, and there is the when is the price, right? And that is how long has it been since certain events, because markets take time to digest events. Now, one of those events happens to be the bear market. So you will notice that our black curve here is actually the November all-time high. I'm actually modeling this from the April all-time high when Coinbase had their direct listing. Now, if you've been following this channel for a while, you know that I generally consider the bear market to have started on that sell-off back in May 2021. Across pretty much every metric that I'm aware of, sentiment set in as a bear. So even though we set a all-time high in terms of price in November, bear market sentiment, the view of investors, had already set into bear market territory as far back as May 2021. We just never quite recovered to that second peak, which obviously is part of the reason why it failed, and we went into the 2022 bear. So why am I modeling from the all-time high? Because it's that point about duration that I believe is more important to be assessing at this point in time. The duration since that bear market sentiment set in. How long does it take the market to digest what was an epic bull run in 2021, driven largely by GBTC, we'll come back to that, to where we are right now? And as I mentioned before, really interestingly, we are trading at a very similar level, right? It goes from a discount to a premium to the previous two cycles. We're talking about the 2016 to 17, and also our 2018, 19 into 20 and 21 cycle in blue. But very interestingly, we're at a similar level. We're slightly outperforming those previous cycles, but again, the actual duration, we're really in that same zone, somewhere between about 35 and 50% below all-time high is typically where we are. So in many ways, this kind of looks very similar in terms of that duration component, quite similar in terms of price. We'll come back to that concept of duration in a moment when we look at things from the realized cap perspective. Now, this has been one of my favorite charts to assess. And again, it's just a very simple derivative of price, because I think it tells a very significant story about what's going on in the Bitcoin space. So what we're looking at here is I've isolated from the cycle low only the uptrends, right? Essentially from bottom to top, which is obviously easier to do in hindsight. Here we're assuming, and when we built this chart, we did assume that the FTX low was the bottom. Thus far, that has kind of stuck, but of course, no one knows what comes in the future. But what we're looking at the top here, this is really the point of interest. What we're looking at is how deep are the drawdowns from whatever our local high is. So at the moment, we're talking about just shy of 49,000. How deep have our corrections been? Now, the big takeaway is that in this cycle, we've had at most about a 20% pullback, right? There's been a couple of very small wicks, but this is on a closing daily basis. We have barely cracked 20%. Now, if we look back here in the previous cycle, we had both the March 2020 and then that May sell-off as well in 2021. These were both 50 and 68% pullbacks, right? Very, very significant. In the 2016-17 run, we had very, very regular 25, 26, 30, 40% pullbacks. These were very, very typical. And you can see, we probably won't spend too much time looking at the previous cycles, but the big picture takeaway is that our current pullback is substantially less. There has been a level of buy-side support coupled with people unwilling to sell their coins. Both of these factors are in play, and this price chart helps us put it into context how resilient the Bitcoin market has been. Now, even our recent correction from 39K didn't actually exceed. It's not even the deepest that we've had during this cycle. In fact, it's the fourth deepest. And that is coming from what was a very, very brief ETF speculation wick up there at 49,000. So it just shows you that underlying side that there's a bit of resilience in this market that may be a little bit underappreciated. Now, moving across to the realized cap. Now, you'll hear me talk about this metric all the time because it really is a foundational tool. We have a whole video and a report, which I'd strongly recommend anybody getting into the world of on-chain analysis. That report and video really tries to explore what this metric is and why it is so important. Most of the powerful tools we do for tracking markets, capital inflows, profit and loss, sentiment, investor positioning, they are either a derivative or a component that builds up into the realized cap. Now, I generally look at the realized cap. I get asked this question quite often. How do we know when capital inflows or outflows are coming in or out of Bitcoin? And I will normally actually point them to the realized cap. It's a little bit of an abstract concept, but it's essentially the on-chain market cap. It values every coin at the price when it last moved, which means Satoshi's million coins are worth $0 because they haven't moved at a real price ever. And the coin that was spent yesterday is worth, well, $43,000 or 38, whatever the price happened to be. Now, why does it represent capital inflows? We can see we actually have a strong uptrend in play on the realized cap. The blue curve in the background is actually the drawdown of this metric from its all-time high. And again, coming back to that concept of duration, how long does it take the realized cap to dip and actually fully recover? You can see we are significantly rallying. We've got an acceleration since October of capital inflows. So why do I say that an uptrend in the realized cap is capital inflows? Well, you can see that it normally trades much higher during bull markets, 2021, 2018. If you zoom back, this is obviously not in log scale. If you were to zoom back, you would see that same very, very vertical jump in every previous cycle. And then it goes plateau to downwards. The reason is that coins bought in the previous bear cycle at 3,000, 6,000, 8,000, 12,000 are being revalued higher as they take profits. So someone buys at 10,000, sells at 50,000. Someone has to come in with that $40,000 difference times the coin volume. So it represents a higher amount of capital inflow. When profits are taking, one guy's profit is another guy's brand new cost basis. So we're looking at new capital coming in, which raises the realized cap and shows that you actually have new money coming in. The other way to think about it is because the realized cap saves every coin at the price when it last moved, it's kind of capturing the amount of capital invested in Bitcoin. Now, it's not going to pick up things that are on exchanges and trades. And the reason why I think that's actually still a very, really relevant perspective is because even though coins do trade on futures and they do trade on spot exchanges, and these are off the chain, they're off book, at the same time, they are also one click away from a buy and a sell. So in a way, all of that volume is it creates the price action. But there is a very big difference when someone withdraws their coins. And this applies to ETFs and custody as well. When institutions take custody and their coins go into some kind of multi-party custody solution, they are also having to transact on chain and change actual private key ownership. usually to some kind of multi-sig. So we are going to be capturing ETF flows in this metric. We are going to be capturing institutional custody because they have to transact and move to someone else's private key. Even if that private key is a multi-sig wallet held by the client, maybe a custody provider, however it's set up, those coins still have to move on chain. So in that way, the realized cap really has been this long-standing metric. It provides us with a view on capital inflows, which you can see are accelerating as of October. It's a really, really good metric to just understand true capital flows in and out of Bitcoin. Okay, so getting a little bit into the weekly events and some of the market dynamics that are actually playing out. What we've got is a very simple price model here, looking at the true market mean, which from the Coin Time Economics framework is essentially the cost basis for active investors. We're not worrying about old school miners and lost coins and Satoshi. We're only worrying about people who are truly active in the market. This is often provided the middle. It trades at a long-term mean and median of 1. It makes for a very, very useful mean reversion oscillator. And when we broke through it here in October, that 30,000 level, this is when we started seeing acceleration across many, many metrics. This is what I've been talking about over recent weeks. And the true market mean price is also climbing, currently trading at 33,300. So just as a bit of statistics, we typically spend about 50%, and the numbers are very close to 50%. The price has been above it for 50% of the history and below it for 50%. So in that instance, we traded all the way below it through most of 2022 and all the way up to 2023. Statistics would say that we've done a pretty decent chunk of our 50% below. And as a result, we would really like to see it trade 50% above. Now, that also gives us kind of a level, 33,300 as it stands today, that you probably wouldn't want to see price close below, right? Maybe on a short-term basis, same way that we tested it from below in 2023. But some kind of break below that would be something that would be unusual. So it helps people understand the mechanics and just, some trigger values to just be paying attention to. Now, the second trace in the pink is the short-term holder cost basis, which we spend a lot more time studying, particularly during trending markets, because it tends to, in a uptrend, provide support. This is when new buyers are rebuying their cost basis. This is kind of a very clear buy the dip moment. For people who spend a bit more time with this would be an MVRV, short-term holder MVRV retesting or trading just below 1, being it's just the ratio between these two. Now, it's currently trading at 38,400. And on a wick basis, we actually came down and did retest it. Now, it is very, very common for this level to get tested and retested during uptrends. And much the same as that logic I explained with the true market mean, those retests are the expected result in an uptrend. Should it not hold, that again helps us go, okay, well, that is a key support level that has been broken. It will generally, in my experience, it will often line up, these retests often line up with Fibonacci levels or popular moving averages. This is because human beings, right? Some people are responding to their cost basis in a more decision, emotional type sense. That will often get expressed in the short-term holder cost basis. Those same things are occurring with traders who are using traditional tools. So there's very often a lot of confluence between these two. But just trying to set up a bit of a framework, we did have a bounce off the short-term holder cost basis. Thus far, it has been a reasonably strong one. Again, getting up to 43,000, but it also helps us understand if we do retest it again and we don't hold it, then we can start to think about maybe we've got one of those deeper corrections in play. If not, it's more or less the expected result during an uptrend. So again, just trying to build up some frameworks and trigger levels to understand some of these mechanics and the market psychology. Okay, so there's been a lot of talk about GBTC and for good reason. So just as a very, very quick history lesson, GBTC was a closed-end fund for many years. It traded at a premium because you could not redeem shares, but you could send in-kind Bitcoin in and essentially arbitrage that premium. Now, many trading firms, trading desks, and investors actually participated in this trade in 2021. So when the premium was very high, we saw 660,000 Bitcoin float into GBTC, a monumental rise in coins held, and a very, very large component of the price action in 2021. When that moved to a discount, and we can see there's this gradually sloping line. This is the Grayscale 2% fee, which is a very high fee, relatively speaking. This is actually the fees being drained out over time. And you can see that the bull market really lost all of its steam following that going into a discount. And at that point, through all of this 2022 bear market, that discount reached as low as 50%. So a lot of those investors were 50% below their NAV. GBTC has now converted to an ETF. It has done the full transition across to being an ETF product, and this allows redemption, something that hasn't been able to be done for a long time. And it's important to note that there's likes of FTX estate, there's the Celsius estate, there's the Three Arrows estate. FTX in particular has been a significant redeemer because they're essentially locking in and getting cash out for the creditors. And we have seen a precipitous decline. If we include all of the fees, so up until the point of conversion, total ETF fees were about 39,300 Bitcoin, taken out in 2% fee, which is quite incredible. And then when we look at total outflows, we've seen 161,000 Bitcoin flow out of GBTC. So that includes that 39,000. So really a monumental rebalancing, a huge amount of supply overhead. And we then put back to one of those previous charts. Within that, there's only been a 20% correction so far. And it does show you a lot of these coins are going from GBTC to a different ETF, but there's a lot of big picture market dynamics that are really shuffling and changing. And as you can see here, this continues to decline day after day. So we are still seeing redemptions overall, and we will have to wait and see when this slows down and whether the demand for the other ETFs is sufficient to absorb it. So there's a lot of mechanics in play, but just putting a bit of context that GBTC really was responsible for a big leg up, and thus far has been responsible for some part of the leg down. But again, we will see how this plays out in the weeks ahead. Now, moving across to some of the on-chain data. Now, this is really important to note that GBTC block, all of those coins, as you saw, most were accumulated back in 2021. Those coins have thus hit an age threshold where 2021, let's just say January for easy math, we're talking about 3 years, some of these coins. Some of them will have moved around more likely, but somewhere between 1 and 3 years is going to capture the age range of those GBTC coins. Now, what we're looking at here are 4 different metrics. Supply last active, so the proportion of circulating that hasn't moved in 1 year, 2 year, 3 year, and 5 year. So the 5 year generally just continues to climb. You occasionally get a couple of spends here and there because old miner coins or something come back to life. But generally speaking, this is over time approximating the lost coin supply, the more coins that hit this threshold. If we look at the 3 year, the 2 year, and the 1 year, they are not too far off their all-time high, but they are indeed off their all-time high. Let me just zoom in on the last couple of years so we get a bit of a cleaner view. You can see they are starting to curl and slow down. A significant chunk of this is going to be because of the GBTC coins. So a lot of those coins are coming back to life because they're quite old and they're now being redistributed. There's also going to be a large collection of investors who are looking at this sell the news event. Maybe they've held their coins since 6,000 or maybe even just the $15,000 lows back in November of 2022 now. Some of these coins, it's that whole mix, but we are seeing those older coins come back into the fore. So that is a component, but let's also keep in context, they're only just coming off their all-time high. So we are seeing a decline in that older supply, but in the grand scheme of things, it's not really the biggest disruption. We can see that the decline during the full-scale bull run, when lots of people really do start to take profit, is far more dramatic. Now, I mentioned before about this kind of balance in supply and demand. When you see old supply declining, but you see price moving higher, that is telling you that you actually have demand flowing in. Somebody has to be absorbing those coins from the market. So we're seeing a couple of components, right? We're trying to really gauge what supply and demand are doing and looking at how many coins are coming back into circulation, comparing that with price movements, gives us a bit of a read on how strong the demand inflows really is. But we also have plenty of other tools to do this as well. Now, I believe it was week 46 last year. We talked about a report called, I think it was called Supply Squeeze. There was another one called the Tightening of Supply, where we introduced this tool. Now, there's a lot of lines on the chart, but let me just describe what's going on here. In the cooler colors, greens, blues, we are looking at several different metrics. Some use time, some use coin volume, some use liquid, illiquid heuristics. The cool colors are showing us coins that would consider them hodled. They're staved, they're stored, they're not moving, they're kind of held by an investor. The red ones are the inverse: coins on exchanges, short-term holders supply, liquid and highly liquid supply. Measures are the inverse. Now, the actual values of these are less important than the general trend. What I really want to highlight is that all of our saved and stored metrics have been climbing, and very similar to the previous chart, are only just coming off their all-time high. Again, some of it's going to be people spending, a lot of it will be GBTC. As a result, we're getting an uptick in our active or mobile, more liquid supply. But let's also just look at this in context. When we get serious upticks, right? Bull markets are when we get this revaluing of coins from old money all the way up to new money. It's this transition from the existing hodler base as they spend their coins and transition them to new inflowing demand. So what we have to keep an eye on is, does this trend actually halt and start to slow down and actually trend higher perhaps, which would signify coin dormancy, hodling behavior, people just not willing to spend? Or does this actually signify perhaps a transitional point where we start to move into an era where there is sufficient inflowing demand that those hodlers do in fact start to take some profits off the table, right? These are some of the dynamics we can start to pay attention to and just look for these initial signs to say, hey, maybe market structure has changed. But of course, if these reverse back in the other direction, it may well have just been a GBTC flash in the pan. We will obviously have to play out and see how this evolves moving forward. So we've talked a lot about, coin supply and different ways to measure coin supply. We can also measure demand through various other proxies. And in this instance, we're really using some of Glassnode's most powerful tools, which is our exchange flows. Now, whenever I look at on-chain, I would put this into the category of an on-chain activity metric as well as an exchange-based metric. This is looking at inflow and outflow volume, just summing them together and just saying how much volume is flowing in and out of exchanges. Now, for reference, this exchange-based on-chain volume is about 88% of the current volume on Bitcoin, of the economic volume. So when we talk about economic, we're filtering out Binance's internal transactions and Coinbase moving things around. We're looking at coins that are changing hands or moving in and out of exchanges. So 88% of that economic flow is currently exchange related. Whenever I look at on-chain activity metrics, I like to use what I'm calling here a momentum chart, simple comparison of the 1 year moving average in blue and the 30-day moving average in red. And the concept here is, the more that the 30-day average is above, that's the near-term activity relative to the baseline, the more market momentum is in play, the more the market is expanding and growing, and there's more interest in trading and buying and selling. Coins are flowing in and out of exchanges at a much greater rate to the long-term baseline. Now, what you can see here is we've actually got a serious uptrend, a very, very strong uptrend. And in fact, on a 30-day moving average basis, there's very, very few days. If memory serves, about 75 days out of all of Bitcoin's trading history at the absolute zenith of the 2021 bull market have had a higher reading than where we currently are. So this is a fairly substantial observation. There is a lot of on-chain activity flowing in and out of exchanges. This looks like an influx of new demand, trading activity. There's going to be speculation. There'll be hodlers. There'll be ETFs. There'll be all of these different components. But on a very, very big picture view, we have a very strong uptrend in exchange-related on-chain activity, which generally speaking and in prior periods has been something that signifies a bit of market strength and a market health. Another observation is we can actually take a ratio of the amount of volume moving and the amount of active entities in the space. And what we're seeing is that the average size of the average transaction is up at $31,000. Now, this isn't an all-time high. It's not quite as significant, but you can see again, here's that October transition point. Something changed quite meaningfully in October, and we've seen an uptick in the average size per transaction. It speaks a lot more to an institutional size. Remember, a lot of the parties that were active back here were sending 661,000 Bitcoin into Grayscale. This was institutional scale capital. Yes, we kind of found out the ramifications of some of those actors later on in the piece, but we are seeing a significant uptick. It has climbed from this more or less retail dominated bottom formation in 2023. We've seen a marked shift in character, which again tells us about the activity going on. And the last chart that I want to pick up is again drawing on some of Glassnode's most powerful tools. Here we're overlaying realized profit and loss. So these are some of the most powerful metrics that we have that really track how much profit or loss are people in in the unrealized sense, or in this case, how much are they locking in? How much realized profit and loss is there? Why do we care about profit and loss? Because it's essentially what drives people to make decisions. Markets are driven by fear and greed, and that's generally anchored to some kind of profit or loss motive. Now, what we've done here is look at not only our profit and loss suite, but combined it with a two exchanges framework. So we're only looking at coins moving into exchanges. And the cool thing about this is it helps us really isolate when are coins most likely changing hands, going from an investor to being actually sold. Now, this also tells us about the inflow because somebody has to buy those coins. So in a way, we're looking at that equilibrium of buyer and seller. Price is obviously the arbiter in between. But here we're looking at what is the average profit or loss locked in by coins sent to exchanges. Now, I won't go through all the details because I'm conscious of time, but we can see that we've had a fairly substantial, again, since October, uptick, where the average coin going to exchanges is locking about $3,500. Now, this is a far cry from the bull market where we had $10,600 or $8,000, $7,000. But you can start to spot when we're getting these periods of excess speculation, larger profits getting taken off the table paired with our previous observations, there's more institutional capital. So this uptick in profit is being matched by an influx of new institutional scale capital. So we've got both of these forces in play. And again, a lot of these tools, different viewers and different analysts and traders will find different use cases for these. What we really try to do is explore how market dynamics work, how that data is then printed into the chain itself, and how we can really extract, what are the key insights to help us model the supply and demand balance for Bitcoin using all these different frameworks to and from exchanges, supply held versus supply spent. These are some of the frameworks that we'll often refer to in this channel. So hopefully this helps provide a bit of a view on what's going on beyond just the GBTC component, because there's obviously a lot of pieces to the puzzle. So thanks as always for tuning in for that session, folks. Hopefully you found that useful. Do let me know if you have any questions or comments. More than happy to answer in the comments section below. Hopefully you found this kind of, a couple of observations around how GBTC plays into it, how we can use the realized cap to assess capital inflows and outflows. That inflection point in October really is quite important. It has been a bit of a market shift structure. We're seeing this across a broad range of on-chain metrics and even actually exchange-related metrics. CME has really picked up. There's a lot of components that really describe this institutionalization since that point. So anyway, hopefully you found that useful, and I will catch you in the next one. Cheers.